Chair Powell, thank you for being here today, and thank you for serving in this critical role at this critical time. I have talked many times in this committee, and I especially right now cannot overstate the importance of the Fed's independence. I said it in the previous administration. I say it now. We cannot be playing politics with our economy, and that is a fact. From a climate standpoint, I would just tell you it's entirely artificial right now anyway, because if you look at the hundreds of billions of dollars this country puts out every year in disasters due to climate instability, we ought to be asking our question, is that sustainable? Because quite frankly, it has to be done, and I don't think it's sustainable. So we've got to start looking for some solutions on the climate side sooner rather than later. The Reserve has a tough job, and I really appreciate how you've done it. Reasonable, working together, making hard decisions for the good of the economy. We have to get this right. So the question is, how much has inflation decreased since its peak?
It depends on the measure, but it's meaningfully, at least a couple percentage points.
Okay, and has unemployment gone down as inflation has gone down?
Unemployment has gone down. Yes, it has, to now a 54-year low.
Yes. So the question becomes, and I always think back to in 1998, I bought some property, and the interest on that property was 10% in 1998, and I thought I got a hell of a deal, by the way. I thought it was just great. But the truth is interest rates have been artificially low for the last, 20 years, probably? And the question becomes, as you look at the economy and as you try to make the determination whether the inflation is caused by demand or supply, where does all that fall in to your decision-making moving forward?
Well, you mean the level of interest rates. So in theory, there's this thing called the neutral level of interest, and we know it only by its works. And neutral is the level that neither pushes the economy up nor pulls it down. And it changes over time. This is the thing about these important variables in economics. So what's happened until now was that the neutral level of interest went down and down and down to the point where, many countries had zero interest rates and very low inflation. Now we have this shock, a series of shocks associated with the pandemic, and we have rates at 4.5%, our policy rate, and we have the labor market very strong and inflation reacting somewhat, and it does raise the question of where's the neutral rate. Honestly, we don't know. I think we look at the current situation and we see that there's not a lot of evidence that, hard to make a case that we've over-tightened. It means we need to continue to tighten. I think we're very mindful of the lags with which our policy works. We don't think we need a significant increase in unemployment, and we're certainly not aiming for one. But we do think there'll be some softening in labor market conditions to get to 2% inflation.
When you're looking at interest rates, I know we talk about energy prices here and the price of gasoline, and then if you go over and Europe is much, much higher. Are we comparable? I'm just curious. Are we comparable with our interest rates here as with, say, Europe?
We're very close to where Canada is. We're a little bit higher than where Europe is. Europe's traditionally had much lower inflation. They now have.
Is with, say, Europe?
We're very close to where Canada is. We're a little bit higher than where Europe is. Europe's traditionally had much lower inflation. They now have very high inflation, and they're still increasing rates, but they're a bit lower in terms of rates.
So if we do not get the inflation under control, and like I said, I think the steps you've taken have been reasonable and measured. If we don't get it under control, what are the impacts of that?
Well, the social costs of failure is one way to think about it, are very, very high. So if inflation were to continue, at some point that will become the psychology. People will come and businesses will come to expect high inflation, and that will make it more self-perpetuating. That will mean an up and down economy. It'll mean it'll mean something that looks more like what we've seen in periods of high inflation. Capital allocation is difficult in a world like that. it's not a good time for the economy. What we want to do is restore price stability firmly back at 2% so that we can have the kind of strong labor market for a sustained period that we had before.
Once again, thank you for your work. Thank you for your independence. Senator Daines.
Thanks for watching, everybody. Make sure to hit that subscribe button. Turn on your notifications so every time I put out a video, you can know about it. It'll come up in your feed. Hit that like button if you liked it. And be positive. Peace.